Hello guys, so it's Vicky here, and today I've decided to share with you my bias on gold. My bias on gold, okay, currently I'm bearish on gold, and I'm going to explain why I'm bearish on gold. We normally do something called top-down analysis, as always, as usual, and we normally start from a monthly time frame. It is much recommended that you start from a higher time frame, go into a lower time frame. So on a monthly time frame, I can't see anything. On the monthly time frame, so I go back to a weekly time frame. So if I can't see anything on a monthly time frame, I go to a weekly time frame. On a weekly time frame, we can see that there is a let me enlarge it for you to see it clearly. Just a moment. You can see this candle. You can see it very well. This candle has completely engulfed this one, and it has closed inside this candle. So meaning that we are bearish up to this point. We are bearish. So you wanna see why we are bearish? This candle has completely engulfed this one, and it has closed inside this candle. So up to that point, I'm bearish. So the buyers have started being bearish. So let's go to a daily chart. On a daily, just a moment guys, we kill the market together guys. So I'm on a daily time frame. So on a daily time frame, we had a breaker. Okay, we had all these breakers. There was a breaker here, so the most late breaker that took place was this one, and as you can see, the major one was bearish. And you could also see this weakness. This high could not go beyond this high, so meaning that the sellers were coming in the market. So this range has not been violated. So this is a lower high, lower low, because it is lower than this one. Another lower high. So what do we expect? We expect another lower low. Get the point? We expect another lower low. So we come to the latest chart pattern, or the latest trade patterns that are available at this market. So from this latest chart, we can also see that we have a break at this point. Let me confirm. I normally confirm my breaker using the line chart. So I have a break at this point, a very clear one, indicating that the market has changed in momentum. So this means that the market swept liquidity above this left shoulder. The market swept liquidity, then broke below it. So this is a strong high which must not be violated. So I'm bearish. Also, this is another confluence for bearish move at the market. So let me switch it back to candle chart. So on switching on the candle chart, so I'm looking for entry. At this moment, I'm looking for entry. So I can go to a weekly time frame to look for maybe clean zones where I can place my entry. So you see this, there was this white candle or bullish candle, another this bullish candle. So in between bullish and bullish candle, we call it an open close level, because this bullish candle open at this point, close at this point. So this bullish candle, the next bullish candle open at this point, close at this point. So this one open at this point, this one close at this point. So this is an open close level. Get the point? So that's a very nice level to place an entry on a weekly chart. So on a weekly, we also have another point, another level. Another level. This level, as you can see, this is a left shoulder level. And if you're not sure if it is the left shoulder, you can switch to a line chart, and you can see that this is my left shoulder. What do you see? What do you say this is the left shoulder? Because after this left shoulder, this momentum ran above this left shoulder and then came it came back and broke below it. So this is my left shoulder, another high probability level. So for me, I normally go with the left shoulder, because not necessarily left shoulder, but I normally go with the level which had already acted as support at some point. So as you could see, this level acted as support. This candle came, supported, resisted, and came and closed at this point. So I could go with this level, and then so I'm no more interested in this one. Okay, let's just leave it, but I'm less interested in that. So let's go to our daily chart. On our daily chart, where do we can we we can refine this one to this level. Let's see where can we refine it to. Let's see where we can refine it to. It was at this left shoulder ilikuwa hapa, so we wanna see where we can refine it to. No any refinement yet. So juu hapa hivi iko kwa left shoulder, ni wapi tunaweza refine tukaisongesha? Hakuna. So we go to a forward chart. On a forward chart, let's see where we can refine this line. Where can we refine it to? We can refine it to touch, unaona, as you can see that it did not touch this support very well, so we can refine it for it to be a good support, ikuwe imeisupport vizuri. So that's what I could refine it to. So you can see that it also acted as support at this point, a support at this point, a support at this point. So resistance for several times, ili act kama resistance hapa, so it is a very high probability zone, sindio? I wanna see if I can also refine it anymore. Let me go to 1 hour chart. On my 1 hour chart, let me see if I can refine it anymore. You need to be patient with the market. Usikuwa una analyze tu mara 1 alafu unaacha hivyo. So on a 1 hour chart, have you seen something? Me, I've seen something. Have you seen? So I wanna make it iguze hapo. Umeona? Iguza this level, ikuweka support ile nzuri sasa. Simone imeact kama support hapo tena. Wapi tena tunge refine to? Nowhere else. So that's our entry guys. So entry inakuwa hapo. Where do we target? We target the external range liquidity. So entry inakuwa hapo hivyo, we target the external range liquidity. And that's all guys. Peace out.